Good morning, it is Thursday, August 20th, 2026 and the euro is trading at 1.1677 against the US dollar, a 3-month high that represents a 0.89% gain in today's European session. This level is the strongest single-day move since late May and places the pair firmly above the 1.1650 resistance zone that has capped rallies for weeks. UOB analysts have highlighted an upside bias, setting a target of 1.1725, which is just 0.4% above today's close. The bias reflects growing confidence that the euro can extend its rally if the current buying pressure holds. In practical terms, a move to 1.1725 would break a short-term ceiling and could trigger trend-following algorithms that have been waiting for a clear break above 1.1700. The euro's strength did not appear out of nowhere. Earlier this week, US inflation data came in softer than expected, weakening the dollar's appeal and prompting investors to shift into euro-denominated assets. At the same time, the European Central Bank has signaled a cautious but steady policy stance, keeping rates unchanged while emphasizing vigilance on price stability. Adding to the dollar's weakness, FX Street reported that the US Treasury is considering doubling its bond buying program, a move that would flood the market with dollars and further depress the greenback. Just 2 days ago, on August 19th, euro to US dollar slipped to a low of 1.1234 during the New York session, creating a vacuum that buyers have now filled. The pair has since retraced above the 1.16131.1650 pivot area, and the short-term H4 chart shows a shift from bullish to neutral with a stop placed at 1.1725 and a target at 1.1610, indicating traders are preparing for both upside and downside scenarios. For traders, the current bias means long positions are being favored, with many setting stop-loss orders just below the 1.1610 level to protect against a potential pullback, while profit targets are clustered around the 1.1725-1.1750 range. Importers in the Eurozone are seeing their cost of dollar-denominated goods rise slightly, which could feed into consumer prices if the trend persists. Exporters, conversely, benefit as their goods become cheaper for overseas buyers, boosting competitiveness in markets such as the United States and Asia. Travelers heading from the UK to continental Europe will find their pounds buying slightly more euros today than a week ago, though the effect is modest. Broadly, the euro's rise is reflecting a shift in risk sentiment. Investors are moving away from the dollar's safe haven status toward higher-yielding euro assets, a rotation that could influence equity flows and bond yields across the region. Looking ahead, the key watch point is the 1.1725 level identified by UOB. A decisive close above this threshold would likely open the path toward the 1.1800 area mentioned in the FX Street report, especially if the US bond buying expansion materializes and keeps dollar pressure elevated. Conversely, if the euro fails to break 1.1725 and instead reverses, the short-term H4 target of 1.1610 becomes relevant, representing a potential 1% decline from today's price. Market participants will also be listening for any ECB commentary later this week that could tilt the bias, as well as upcoming US data releases such as retail sales and jobless claims that could reignite dollar strength. In the near term, the bias remains to the upside, but the trade is conditional on holding above the 1.1650-1.1610 support zone. To sum up, the euro is presently enjoying a 3-month high at 1.1677, driven by softer US inflation, expectations of a larger US bond buying program, and a cautious ECB stance. UOB's upside bias target of 1.1725 offers a clear, measurable goal for bulls, while the short-term charts stop at 1.1725 and target at 1.1610 reminds us that a pullback is still on the table. For anyone trading euro to US dollar, the lesson is to respect both levels. Consider long positions with a stop below 1.1610 if you believe the bullish momentum will hold, or prepare for a short-term bounce sell scenario if the euro stalls at 1.1725. Stay disciplined, watch the key technical zones, and keep an eye on the macro headlines that can shift the bias in a heartbeat. Thanks for watching. If you found this analysis useful, hit the like button, subscribe for more daily Forex insights, and we'll see you in the next video.